The $200 trillion bridge. Why real-world assets are Web3's next frontier. If you've been in the crypto space for a while, you know the narrative has been loud. Hyper-volatile coin prices, trading mania, and of course the ever-present digital art debate. All of that is fun, but sometimes it felt like the real-world impact of blockchain was getting overshadowed. Well, get ready for the upgrade. The next massive wave, the one that truly connects the digital and physical worlds, is the tokenization of real-world assets, RWA. This isn't just another shiny new crypto trend. RWA tokenization is the bridge we've all been waiting for, linking the massive 200 trillion plus world of traditional finance, TradFi, directly to the efficiency and transparency of decentralized finance. It's the moment blockchain stops being just a sideshow and becomes a core piece of global financial infrastructure. Let's break it down. What is RWA tokenization, really? In simple terms, RWA tokenization is all about taking something valuable that exists in the physical world, a piece of real estate, a corporate bond, or even a barrel of oil, and issuing a digital ownership stake for it as a token on a blockchain. Think about a share of stock. Historically, that's just an entry on a central company's ledger. When you tokenize, you turn that legal right into a smart contract token, usually an ERC20, on a public, immutable ledger. Why bother with all this digital plumbing? Because it unlocks incredible value. Fractionalization. That $50 million skyscraper, you can now own 0.001% of it for just a few $100. Tokenization shatters high financial barriers to entry. 24/7. Liquidity. Traditional assets move slow. Real estate sales take months. Tokenized assets can be traded globally, instantly, 24/7. Imagine never having to wait for a bank or an intermediary again. Transparency. The ownership history is right there on the ledger. No more hiding assets or questionable backroom deals. The hottest spots, where RWA is thriving. This market isn't theoretical. It's booming right now. 1. Tokenized U.S. Treasury bills, the institutional flood. This is the big one, driven by institutions. 2. Private credit and lending. Before tokenization, only big banks and funds could touch private credit loans to non-public companies. How it works. DeFi lending pools gather capital and direct it toward real-world opportunities, like providing inventory financing to a logistics company. The impact. You get access to institutional-grade, non-crypto correlated returns, all facilitated by transparent DeFi protocols. 3. Real estate, from deed to digital. This is the classic, most intuitive RWA use case. The play. A commercial building is put into a legal entity, and shares of that entity are issued as tokens. By the token, you own a fraction of the equity and the rental income. 4. Commodities and precious metals. Gold and other physical assets are being digitized to make them easier to trade and verify. How it works. Custodians store the physical gold in vaults and issue a token backed 1-to-1 by a troy ounce of gold. The impact. It allows for 24/7 trading of a traditional hedge asset with the transparency of an on-chain audit, eliminating the need to physically move or store the commodity. The developer's challenge, bridging the legal gap. Here's where it gets interesting for our developer community. A token is just code. A deed is a legal contract. How do we make sure the token actually grants legal ownership in the real world? The answer is the legal wrapper and coded compliance, which uses a multi-layered system. The legal entity, the contractual bridge, and on-chain compliance. Developers code the token to include regulatory logic, like embedding KYC/AML checks right into the smart contract. The token can literally be programmed to reject a transfer to a non-whitelisted wallet address. Why this is your next focus. The age of tokenized assets is about making finance better, more inclusive, faster, and more trustworthy. For the enthusiast, this means new stability and diversification. You can earn real-world interest on your digital assets, effectively hedging against crypto volatility. For the developer, this is the frontier. Solving the RWA puzzle is what will solidify Web3 as the back end for the next global financial system. We're moving past the noise and building things that truly matter.